financial market conditions. As stated earlier, the macroeconomic outlook is undergoing tectonic shifts, and our policy response has to be preemptive and recalibrated dynamically to the evolving outlook. The Reserve Bank will continue to adopt a nuanced and nimble-footed approach to liquidity management while maintaining adequate liquidity in the system. Let me again read this statement because it's very important and the communication should be very clear to the market. The Reserve Bank will continue to adopt a nuanced and nimble-footed approach to liquidity management while maintaining adequate liquidity in the system. At present, liquidity management is characterized by two-way operations through variable rate reverse repo auctions, that is VRRR auctions, of varying maturities to absorb liquidity, and variable rate repo auctions, that is VRR auctions, variable rate repo auctions to meet transient liquidity shortages and offset mismatches. This approach will be continued. It may be noted that the interest rate for around 80% of the liquidity absorbed under the LAF during the fourth quarter of 21-22 has firmed up close to the policy repo rate due to the rebalancing of liquidity through our VRRR auctions. Accordingly, financial participants and financial markets have been prepared for the eventual normalization of the LAF corridor, which we are doing today. So therefore, the normalization of the LAF corridor should not come as a surprise to the market, because we have prepared the market over the last several months, whereby the 80% of the liquidity is being absorbed at a rate close to the repo rate. Further, it has now been decided to fully restore the liquidity management framework instituted in February 2020, albeit with some refinements to enhance its effectiveness. Accordingly, the following measures are being instituted. 1. The amendment to Section 17 of the RBI Act in 2018 empowered the Reserve Bank to introduce the Standing Deposit Facility, that is SDF. By removing the binding collateral constraint on the central bank, the SDF strengthens the operating framework of monetary policy. Accordingly, it has now been decided to introduce SDF as the floor of the LAF corridor. This would provide symmetry to the operating framework of monetary policy by introducing a standing absorption facility at the bottom of the LAF corridor, similar to the standing injection tool at the upper end of the corridor, namely the marginal standing facility. Thus, at both ends of the LAF corridor, you see both ends currently after we have introduced SDF at 3.75. Currently, the LAF corridor, therefore, the 50 basis points corridor is 3.75% SDF at the lower end of the corridor and 4.25% at the upper end of the corridor through the instrumentality of the MSF. So thus, at both ends of the LAF corridor, there will be standing facilities, one to absorb the liquidity and the other one to inject liquidity. SDF absorbs liquidity, MSF would inject liquidity, and this will depend on the evolving financial market conditions. It can vary from day to day also. Accordingly, access, and further, this is very important to note, that access to SDF and MSF will be at the discretion of the banks, because they are standing facilities. They will be at the discretion of the banks, unlike repo, reverse repo, OMO and CRR, which are available at the discretion of the Reserve Bank. So the standing facilities give the discretion to the banks. And the other tools I mentioned, the OMO, the reverse repo, or the CRR actions, if any, they are at the discretion of the Reserve Bank. Notably, and this is very important to note, that SDF is also a financial stability tool in addition to its role in liquidity management. So the introduction of SDF is for twin objective of doing proper and appropriate liquidity management in the current context, and also to further strengthen financial stability. So it has two broad objectives. The second point, I mentioned that there are, we are instituting several measures. The first one I have said. The second point is as follows. The SDF rate will be 25 basis points below the policy rate, and it will be applicable to overnight deposits at this stage. It would, however, retain the flexibility to absorb liquidity of longer tenors as and when the need arises with appropriate pricing. The MSF rate will continue 25 basis points above the repo rate. Thus, the width of the LAF corridor is restored to the pre-pandemic configuration of 50 basis points symmetrically around the policy repo rate, which will be at the center of the corridor. 3, the third announcement, the fixed rate reverse repo, that is FRRR, if I can put it that way. The fixed rate reverse repo FRRR rate is retained at 3.35%. It will remain as part of RBI's toolkit. However, its operation will be at the discretion of the Reserve Bank for purposes to be specified from time to time. The FRRR, that is fixed rate reverse repo, along with the SDF, will impart flexibility to RBI's liquidity management framework. 4, both MSF and SDF will be available from 17:30 hours to 23:59 hours on all days of the week throughout the year, from 5:30 p.m. to 11:59 p.m. on all days of the week throughout the year, irrespective of holidays or Saturdays or Sundays. 5, it has been decided to restore the opening time of financial markets regulated by the Reserve Bank to the pre-pandemic timing of 9 a.m., that is 9 in the morning, with effect from 18th April, without any change in their closing time prevailing at present. During the pandemic, now these are some of the announcements I made.